Hey everyone, this is Ryan Mallory for SharePlanner.com. Today is May 5th, 2016. Happy Cinco de Mayo. I know I'll be celebrating today with a burrito. Always do. Well, honestly, it doesn't have to really be Cinco de Mayo. It just has to be any particular day of the week, and I'm usually eating a burrito bowl, or anything that involves Mexican food because that's pretty much my favorite dish. So, in any case, now we got the pleasantries out of the way, let's go ahead and jump right into the stock market here. It actually looked, and if you keep track on Twitter or in the blogosphere, there's a lot of people that were saying today was going to be a big bounce day. Today the market was primed for a bounce. It was going to go up and everything else. And instead, we've got about 33 minutes left before we close out the day, and the market is down 2 points. Now, we were up a little bit higher. I mean, at one point, the S&P was up about 10 points this morning, and it has given up all those gains and continues to push lower in hopes of finding a bottom somewhere. Now, one thing to definitely be aware of is this 50-day moving average. It hasn't quite tested it yet, but as you can see, it is closing in on a date with that MA. You've got some support right here at around the 2040 level, I want to say 2040 to 2045 area. And then you got the short-term resistance level. And I'm not seeing a lot of people, talk about it at all, but I mean, short-term resistance is still resistance, just like long-term resistance is. Long-term resistance tends to be a little bit more difficult to push through or to break. But in this case, the short-term resistance has been broken. You can see here it was formed going back into the early parts of March and tested on multiple occasions. Finally, yesterday it broke, and today it's trying to do a little bit of a follow-through. Of course, with about 30 minutes left of trading, you can still see some pretty significant price moves either to the upside or downside. Of late, it's been to the upside. The buyers keep coming in, but this is a little bit different though today because the bulls have had their chance to really push the market higher, and it has not done so. So I think with that being the case, there's a good chance that we don't really see any major pop into the end of the day. If we do, then watch that 2051 level or so. If it breaks through that 2052, then there's a good chance it might try to push up to 2056 before the closing bell. The S&P, so we've gone over that, but let's look at it from a couple different time frames here. This is the 30-minute time frame. You can see here, ignore all the lines on there because that's just carryover from the daily chart, but you see it's got this massive head and shoulders pattern that it's dealing with. This being the left shoulder, then you got this big head, then you got a small right shoulder, and usually the right shoulders are a little bit deformed when you compare it to the left shoulder, and that's just typically because at the time that the market's creating the right shoulder, the conditions are already starting to rapidly weaken, so there's not as much care put into forming a very good right shoulder. All right, let's look at the weekly chart now. On the weekly, you can see that, golly, I mean, how annoying this market has been over the last couple of years is, in essence, you go back to 2014, and mind you, we're in 2016 now, so for the better part of 2 years, this market has not gone anywhere. So you go back to early February of 2014, about 26 months now, you've just been forming this massive right shoulder, and almost this right shoulder has been violated, but we'll say that it still has merit to it. But in any case, it suggests with the recent topping out here that the market's going to probably be pushing back down towards the 1900s and maybe even to the 1800s before it finds its footing again. Though I would go to say this, that if we test the lower 1800s again, I think they're going to eventually break, and you're going to see a massive sell-off, which would likely be the cause behind some kind of big news event, whether it's the Brexit or the some of these energy loans affecting the financial sector or whatever it might be. But in any case, you break to those 1800s again, lower 1800s, I think they're going to break this time. Let's look at quickly, we'll look at the NASDAQ here. We've had some support here of late, and that looks like it's breaking here. You can see that it was broken yesterday. I'll just draw the line so you can see exactly what I mean here. That little yellow line right there going across the entire expanse of 2016. Broken yesterday, so you know there's not a lot of support underneath. You might have some support here around the 46.44 level, but that's still a good ways off as well. Then you got the Russell. Draw this chart on the Russell here. You have a pretty nice rise in trend line that has been broken over the past 2 weeks. That's going to, and also the 200-day moving average this week has been violated. That took place on Tuesday, and ever since it's been selling off more and more each day. So let's see if this 50-day moving average has any possibility of creating a bounce for this index or not. And then you got the Dow. And really with the Dow, you have this big old double bottom pattern here. See, this is the first bottom here, and then you have this big second bottom here. Actually, yeah, let's use that. First bottom, second bottom. Then you have this like neckline confirmation level that it did break out of, but now it's lost that confirmation. So basically you can say this little area right around in here was just simply a head fake. So so now you have to ask yourself, okay, are we going back down to the 50-day moving average, or is this going to be a bigger correction that sees us go back down into the 15,000s or 16,000s? All right, now let's look at some of these commodities here because they've been playing a huge role in the market of late. USO, and man, this thing's a sore spot for me, quite honestly. I'm going to get rid of the Fibonacci retracements on this thing. But my gosh, you know, I shorted oil yesterday, and I was up about 1.3%, I guess it was, going into today, and it was looking pretty good. And then I guess you had these Canadian wildfires and this Libyan blockade that, you know, created supply fears that drove the price of oil through the roof. I think it was like up 5% at the open today, and I was pretty much right at my stop loss. Hadn't triggered when the market opened, but it dropped down from, like, my stop loss was at 11.27 on USO. It went down to 11.14. I was like, you know what, I'm going to take that as a gift, get out for a 2% loss on that particular trade, and move on to the next trade. Now, what I didn't foresee is it just continuing to deteriorate. I think now it's back at pretty much my entry price of 10.92. That would definitely have been nice to have held on to it, but you're that close to your stop loss. You're not looking, your success on trading is not marked by how well you do on one particular trade. It just, that's not what it comes down to. It comes down to how you traded in the grand scheme of things and how the profits add up. So if I can avoid a 3.5% loss and take on only a 2% loss, particularly when oil is being very volatile in the early morning session and could easily within a moment's notice pop right back up to 11.27 and take me out, yeah, I'm going to take the 11.14, 11.15 and get out of the trade and move on to my next trade. And that's what I did. And so, yeah, I guess be like, yeah, I shouldn't have gotten out of that trade. Oh, that sucks. And what was I thinking? That's really not the mark of a trader. A trader does not look at what he should have done afterwards in the sense that, oh, if I would have just held on a little bit longer, or, oh, next time I'm never going to do that. I'm just going to play out my stops. That's not productive. That's not going to help you as a trader at all. So what you got to do is you got to look at the best information that you had at that time. Knowing the history of oil and how volatile it can be, I was able to shave a few percentage points off of that trade and just get out for a minor loss rather than, taking the full stop loss. So, but USO, I mean, this is going to be a very tricky chart here. It's not making it higher high here. In fact, you can make the case that if it breaks yesterday's lows, that it's on basically making a lower low. It was tempting. It's even tempting right now to get back in right where, I got in at yesterday and see if we can't get like a sell-off going into tomorrow and into next week. But at this point, I don't feel like that I've got a technical edge on this trade anymore. It's being far too resilient. It's holding that 20-day moving average, and I felt more comfortable going ahead and just removing myself from this trade going forward. GLD, still hanging in there pretty strong, guys. I mean, this is, you know, right at about 121.75. You take GDX. I mean, yeah, we're down 4 straight days, but it's not giving up that much ground. I mean, we're down less than 1%, you know, a little more than 1%, I guess you would say. But you take GDX, pretty powerful chart here. You go back, you can see that it's got a support level that it has bounced off of, and a support here going back into April. It's bounced off, and now it's trying to pop higher again today. You know, if you wait to get long on it tomorrow, the chances of it opening up and being beyond where you can get a reasonable risk reward on the trade is that could very well happen. So if you're going to trade it, I would probably say, you know, get in at the current price with maybe a stop loss below 23.27 or yesterday's lows, and just see where it wants to go from there. Then you got silver. And this chart here, I'm not too crazy about. I think let's look at it from a weekly chart first. If you look at it, there's a bit of, you know, resistance of where a lot of rallies have come and failed. It's right at that level there with the 1694 up into the 1770s. There's a good chance that this rally is going to fail here as well. If you're long, I definitely wouldn't be long much longer if this thing ends up breaking below 15. If it breaks below 1592 at the very worst, I would get out of it. I would probably be even quick to get out of it if it breaks below $16 or 1604. Yeah, this one looks like it has a little bit more profit selling to it, or profit taking. And then let's look at the FANGs here, FB. Got a little bit of consolidation there. Some people are hoping that it takes out the recent highs. I don't really see a huge technical edge for getting long on it right now. Maybe if it can break above that 120 or 118.50 level, it might be worth getting long on. But you got to figure most of the move is already cooked into this stock after its earnings beat. So I don't expect it to make a move to 130 or anything anytime soon. On Amazon, it's the same case. It's possible that it's going into this gap again, which would be below 654, not too far from that. If it does that, there's no reason to hold on any longer either, because it's going to be more inclined to fill that gap than anything else. Then you got Netflix. Still very bearish since its earnings. It's not really going anywhere. I think it's only had like 3 updates since its earnings report. So nothing good really going on there. I think it's more inclined to test 81 before it tests 112. GOGL, Google. I've been looking at this one as a possible short lately, because what you have here is somewhat of a sloppy double top pattern. And that could very well, you know, if it breaks below, I'm going to say like 702. If it breaks below that 702 level, I think you have a confirmed double top pattern, one that I might even short in the coming days if that takes place. Resistance a little bit here at the 200-day moving average. And yeah, so 702, I will watch that if it breaks, particularly if it breaks below 700. Could make for a very nice short setup here. Lots of support there. Watch for that break. And then finally, Apple. This 92 level is for real, guys. Look at this. Look at this support level. You can see here that there's a lot of support at this 92 level. You got the 200-day moving average there that is testing at as well today. If that breaks the 92 level, I think this thing could possibly go down into the 80s before it finds any more support. I mean, this is a huge distribution pattern. I don't like it. You could call it a ascending triangle pattern as well. But yeah, not much to like on that chart there. And hey, you know what? I know I've been shorting a lot of stocks lately, but I actually bought a stock today, J&J, and I'm not really up that much on it right now. Yeah, pretty like 0.01%. So pretty much right where I got in. I got in at 112.65. It's trading at 112.67. This is simply a hedge against my other 4 short positions that I have in the portfolio right now. I have Oracle, MasterCard, XLF, and SDS. SDS I'm actually long on, but it's a short on the market. It's an ETF that, you know, trades inversely to the market, so I call it a short. But I'm actually long on it. But this is a nice bull flag here. I mean, it's held up well to selling of late. It's got a lot of support here at this 20-day moving average. So if that breaks, there's probably a good reason to get out of it. If the market decides it wants to rally, hey, at least I got a foot in the door to where I can start, you know, migrating towards the long side if this market decides to start rallying again. That's going to do it for today. If you guys have any questions, feel free to email me, ryan@shareplanner.com, or you can just simply email me. Ryan at sharepointer. Yeah, I don't know if I just repeated myself or not, but yeah, email me at, sorry, I had a brain fart there, but Ryan at sharepointer.com. You can email me there if you have any questions, or sign up for the SharePointer Splash Zone. It's a great place for traders to get my real-time stock alerts in the chat room via text, via email, and that's even for international traders as well. I can send them overseas, get them just as fast as the people here domestically get them, which is, like I said, real time. And great community of traders, man. Very active. Lots of people throwing out ideas every day, and hope to see you there. You guys have a great Friday and great weekend ahead. God bless.